Michael J. Frank. Michael, how you doing today?
I'm doing great, alive and kicking.
Alive and kicking. Hair is looking good. We're ready for the interview here. So, kick us off. Maybe start with just one or two sentences, Michael, on what your company does or what you do, and then we'll put that on ice and come back to it maybe in about 15 or 20 minutes. But I like to give people a bit of a sneak peek in terms of where we're going with this interview.
So I am a husband, a father of three, married forever, 37 years. I am a former market maker and specialist on the trading floor. I exited to a public company a couple decades ago. So you get an idea of how old I actually am. And I am currently a founder of Gilder with two millennial co-founders, Brian and Tiger. We're a community for founders. We provide access to mentors, tools, and events to help build a successful company. I am also on a bunch of advisory boards, one nonprofit, two for-profit, and I do a bunch of other stuff. I'm a FINRA arbitrator, and soon to be the FBI has tapped me on the shoulder to be a cybersecurity expert for the East Coast, and I think I'm going to do it now that I realize it's actually real after spending half an hour trying to figure that out.
Interesting. So that sounds like movie level. But Michael, let's take this one back a little bit. Yeah, you started your career in 1980 on the floor of the Philadelphia Stock Exchange. You were barely out of college. You were working as a market maker. What drew such a young guy, into the chaos of trading and, instead of like a traditional corporate path? You start your answer. Just give me 1 second. I'll be back.
So I was finishing college, and my brother had met his wife to be at college at Fairleigh Dickinson University, and the father-in-law said that he was not going to earn enough money working retail at a record store, and that he should come on the trading floor. And he went on the trading floor late 70s and made $80K that year. And my dad had worked for a company for 20 years and was making 42.5 and a Cadillac kind of thing. And I'm like, oh my God, what is this? You've just doubled dad's salary after working 25 years. Let me learn this. And that's when I became aware of that there was a trading floor, that there were people on the floor and trading equity and index options and things like that. And that's what drew me in there, was my brother going there. And I thought that I don't know, smarter than him or physically faster than him or anything. So like, if he did that, and I think I'm sort of maybe better, I wonder how much I can make. And that's sort of drew me to that it even existed and what was going on.
And growing up, were there early signs that you were wired for like high stakes, fast paced environments? Were you competitive as a kid with your brother, or did the trading floor awaken something in you that you didn't know was there?
I was definitely very competitive with whatever we did, including never giving up when he beat me up. And I was in elementary school, middle school, in a lot of scuffles, I'll call them, where even if I lost, you better put me down because I'm probably hopping on your back after. So it was just a rambunctious young guy, and what a perfect place to go to a trading pit where, you're pushing and shoving and fighting for things. So no, I was on, I was not the greatest athlete in the world. I was okay. I was on Little League, and I did some track and field and things like that. But no, there's multiple parts to trading, so it's I can explain it later a little bit.
Let's go into it. Yeah, I'm kind of curious. You've described the trading floor as a place where you had to reset every day and take accountability for outcomes. Can you walk us through what a typical day looked like during those early years? The energy, the pressure, the lessons that got, baked into who you are today?
Um, Typical trading day is showing up at least an hour before trading opens, checking your sheets, making sure you understand what's going on, looking at the news, seeing the stocks you're trading, what's going on, what the stock is doing. And then, being in the crowd from the opening bell till the closing bell, which used to be 10 o'clock to 4 o'clock. It was 9:30 to 4:02, and then 4:10. They've moved it around a little bit. But there's multiple parts to sort of trading. There's one thing, like you could go buy the book Macmillan Options as a Strategic Investment and read through that and understand sort of the math behind it. But you also have to go to the trading floor, because just because you know what the math is doesn't mean that you can execute. Doesn't mean you can stand in the crowd and hear what's going on, get your name on a trade, clear it, hedge it, and absorb the punishment that there is when, sometimes you do a big trade and you're trying to hedge it and the hedge is gone. Like, and, now the stock's moved 30, 40 cents. Now, what do you want to do? Like, do you want to lock in your loss? Do you want to sort of wait? Do you, what is your position like? So there's multiple things going on the trading floor. And when these big orders come down, everyone is sort of going for the hedge at the same time, depending on who's doing what. So, there's a lot going on. Just because you understand the math doesn't mean you can execute. And just because you execute, if you're not aware of the math and what's going on, one of the major components of pricing an option is volatility. And if you are trading options at a 6 months or a year out and you change vol by half a click, that could move an option $1. If you got something wrong and you're pricing wrong, you're going to be beat hard. And then, there's trades that you're doing that you realize maybe, you did a trade. If you're trading on the floor and you get 60% of your trades right, you're a huge winner. Like, as long as you're cutting the losses off and or hedging and things like that. It all depends what you're trying to do.
Got it. So your team at Gateway Partners built something called RoboClerk, a piece of software that automated the reconciliation of thousands of daily trades. So just curious, that sounds like an early brush with automation and innovation. How did that experience shape the way you think about technology and business efficiency?
So we were on the floor. Our main office was Philadelphia. I was up on the Amex. I had my brother and other generals down in Philly. We were on the Cboe and the Picos. But one of the things we did every morning was Goldman Sachs / Spear Leeds would hand us sheets that are this thick of every trade we did. 1, 10, 5, 50s, 100 options, 100 shares of stock, 1,000, 10,000. And we would have to go through and take every one of those trades and make sure they were in the software that we had built properly on the right side at the right price. This took checking thousands upon thousands of trades. It took us 5 clerks every morning from 7 o'clock right before the opening to get this stuff right. And then to go check the trades where you may have what they call a DK, a don't know, you're both on the buy side, you wrote the ticket wrong or the wrong price, and most of those things straighten out. So we decided, or my tech guy said, hey, I can probably do something, you want me to spend time on it? And all it was a simple take the database of all the positions that Goldman thought we had and take what we had and check them and spit out any differences. So we went from 5 people doing this in the morning to 1 person doing this, and it's being spit out a minute or 2 later, and all you have to worry about is those 10, 20, 50, or 100 trades out of 10 or 20,000 trades that have an issue, and then get to the bottom of them and fix them. So we were able to take the 3 full-time people that were doing that and move them as specialist clerks right away, and then have people doing part-time. But I mean, our greatest win, I think, that was great, but our greatest win was building a gateway trading system, GTS, which
I was actually going to ask that. So you sold that in 2001 to Knight Capital Group after building it into a leading options specialist across all 5 exchanges. So that's a massive exit. What was going through your mind the day the deal closed? Was it relief, excitement, or a sense of what now?
So they were not really interested in our software, although they wanted to understand our software, and I wouldn't show it to them because I just didn't want them to see it. Like, we thought we had something special. So they actually, their head tech guy, his name was Effie Gildor, actually an Israeli fighter pilot, retired guy, flew us up in his private plane to White Plains and showed us his, and then we showed us ours. And they had virtually something similar, maybe even a better bell or whistle. They were particularly interested in our specialist books and having specialist books everywhere. We coined a deal. It was a good deal for me. We had made a lot of money in 2000 using the software and the volatility. We had started to lose a lot of money in 2001 for decimalization, payment for order flow, and multi-listing, where Intel, I stood as a local in the back months, was now on 6 exchanges. So every quote was just locked or different, and brokers were coming in and making you or forcing you to try and buy on a better bid out there or sell on a better offer, sometimes below your bid or buy above your offer. A disaster. And I realized, like, I'm done. Like, I can't do this. I can't win this war till I have broke all the exchanges linked. And that was going to take a year or two. So you can clear out all the dead weight of all the people who have fake quotes up that you're going to honor that don't even exist and they don't care about. So we, building the gateway trading system was paramount to us making all that money and understanding risk individually and as a firm. So we went what I'll call portfolio style risk, where like one of our better trades was, I think we had Brocade, and they had a player in Brocade that kept selling 2 or 3 year out options in Brocade, which was a high flyer, like a $300 or $400 stock. And these options were like $48 themselves. So we would buy like 500 at a clip, which is a lot. It's a lot of Vega. And we couldn't get hedged in Brocade because the guy was crushing volatility in the out months, and we were buying them 3 or 4 standard deviations below what we thought they were worth, or $5 or $10 cheaper than we thought they were worth. So we were the trader there was buying them, and we were hedging in other products using our software to understand the correlation and try and hedge in other products. And it was pretty lucrative for us because eventually he disappeared. And then he came back to close things out and brought them back to sort of fair value. And we were selling them and taking off the hedges on the other side. But by us having the software to go to portfolio risk instead of individual risk, it allowed us to really do well. And then we started bonusing people appropriately. Does the guy in Brocade who bought and made, X 7 figures trading eventually deserve that win? No, like he didn't make the $3 million. Did he? Was he part of the whole thing? Yeah, but there's other people hedging on the other side of his kind of stuff. So we bonused everybody based on a percentage of the profit of the firm. And for people who got execution done, we made sure they got bigger bonuses. What do I mean by that? We'd message everybody, hey, it's Thursday afternoon. Remember, volatility, it's a long weekend coming up. Don't be buying any of the front month stuff. You'll get hit on theta. Anyone who's trading at fair market value, please sell, because we're buying 2 or 3 standard deviations cheaper in other products and vice versa like that. So trading to understand what's going on in the whole world of options and not just your little, pit or whatever you're trading was super important for us.
Very cool. Let's maybe switch gears now. Yeah, I wanted to talk a little bit about your current company, Gildre. So the tagline is community for all. Tell us the origin story. What gap did you see in the startup ecosystem that made you say, we need to build this?
I was working as a mentor at NewChip. NewChip was an accelerator of Austin, Texas that accelerated thousands of companies very profitably and very successfully. Eventually went bankrupt 3 years ago. While I was working there, I met Brian and Tyga. Brian I interacted with regularly. He was running all the mentors. I was mentoring eventually half a dozen fintech startups. All went on to do good things. When the whole thing collapsed overnight and the CEO did some hokey stuff, all sorts of crazy stuff, and ran it from 0 to 200 million back to 0, which is just crazy. But Brian and Tyga were out. I was out. I lost in bankruptcy. I lost all my mentor shares and things like that. And we were talking. I'm like, what are you doing? And I had liked Brian a lot, and I thought he was a good guy. And he's like, we're thinking of starting something. I'm like, I'm in, man. Like, let's go. Like, let's do something. I like this kind of stuff. I like building things. I had built Gateway and sold it. I had tried building Investments, our robo-advisor company, and we failed at that, and for various reasons. But we decided to build a community and not an accelerator because we didn't know if that accelerator was going to come back out of bankruptcy, and the CEO would not take kindly to us trying to do the same exact thing. So we built Gildre then, and now almost 3 years later, it's a lot different than what it was, and we've moved to the Circle platform from Slack and Squarespace, and we have a lot going on. We now offer what I call plug and play for VCs, incubators, and accelerators. We offer three different levels from 59, 150, or 350 a month, depending on how much handholding and mentorship a company would want. We have lots of different partners, and things are going well. And I get to work with two millennials who don't know the word too much work. Like Brian, works like a fiend, and Tyga, not as much, but does a great job.
So you described the company as like having an unbiased board of advisors. I was curious to learn a little bit more about that. Most founders I know struggle to find even one good mentor. So how do you guys actually match founders with the right mentors and resources at the right stage?
So people who come in and want our top plan, it's $350 a month. I believe we call it platinum, and $350 a month or $4,200 a year is kind of dirt cheap. You're not giving up equity like an accelerator where people give up that kind of stuff. We will pair you with a mentor in whatever subject matter expertise you need help with. You need help with product market fit. We have multiple people who've done that, multiple exits or Google or Meta or wherever, and they will help you. And once you got product market fit, you need someone to help you build a funnel that's done this before. We have that too. We'll switch it out. So, when you're building something, barring the fact that you're just not heads down every second and you're willing to come up and ask for help and need help and things like that, having a mentor or an advisor or even a community that's been there and done that and doing that and has those answers and can direct you to those assets or those things or calm you down or explain something in a different way, I think it's super important. Building a startup is really hard, and a large percentage of them go out of business, never raise significant enough capital, never maybe raise capital and just don't get enough customers. And there's a lot of people out there, like, they'll raise capital and they'll build something and then they'll try and find an audience. Like, that's backwards. If you can, like go to somewhere, find a problem, tell them, hey, if I could fix this problem for you, would you have interest? Raise some capital from them or whoever, and then go build something. You have your first customer, rather than going out there, especially now with the AI. I was just at an event in New York City. Lawrence Dean Sandler runs this great event for startups. It's free. You can sign up. And they had a page up there while three VCs were talking, but they were flashing a page, and it was all a law firm, all startups that are doing something in law. There was so many little blings there. I tried taking a picture of it quick. There must have been 500 different companies. Like, if you think you're starting something and no one's got this idea and you're just going to come out there and win the world, I got news for you. Maybe not. If you have the greatest idea in the world and you don't have enough capital and someone understands your idea, they could just grab capital and accelerate ahead of you and maybe have an inferior offering, but now you've lost your first strike, kind of thing. That's why you see so many people on LinkedIn that are in stealth, and rightly so, right? Like, they're in stealth. Some of them are in stealth for a long time until they have 50 million in revenue, because now everyone can build something in AI, or not everyone, but it's easier to build. So the question is the moat. The moat is distribution, or how you're going to differentiate yourself from someone else spinning something else up.
Yeah, I couldn't agree more, Mike. So I think we're nearing the end of this one. So maybe I'll land the plane with this last question. You've built, companies, sold companies, invested in brain health, mentored hundreds of founders, and now you're building a global community. If your company achieves everything you're dreaming of, what does it look like 5 years from now, for founders who are just getting started?
We are a low-cost provider. Like, $59 a month is dirt cheap for what we offer. I've had friends like, why do you price that way? Even my wife's like, that's ridiculously cheap. I'm like, we're not looking to, this is not a unicorn for us. This is we're trying to help people, and can be pretty lucrative if we get thousands of people on the platform. Not everyone spends their whole life on the platform. They grow up, they go to Series B or something. They don't need the assets that are here. What does it look like? I think it looks like us with lots more people on the platform, doing more in-person events, as well as our weekly online events, and helping lots of people and having a besides a page of love, which you can see on our webpage, having a page of people that have gone through here to successful exits and maybe IPOs or selling to different people. We have a bunch of them sort of already that we've worked with. I don't know, maybe more. I'm not sure.
I like that. Well, Michael, thank you. You've been gracious with your time. Quite a compelling story and career. And yeah, just the fact that you're aligning with founders and helping them, at the time when they need it most, I think that's quite noble. So thank you for this interview. If anything else you want to share, Michael, before we bring this one to a close?
I think we are in a time that is so significant that people should understand. It's probably more important than when electricity came about. It's probably more important than when the computer came about. It's the AI that is here, and it's going to change everything radically. We'll have robots maybe cleaning bedpans in 2 or 3 years and things like that. And this is a huge time for everyone. They should be understanding how it's going to affect them, their lives, and their businesses. And for all those people that are not using AI, you're not losing your job to AI, you're losing your job to someone who's using all these tools. And for all these companies that are not adopting and sort of sitting and waiting, you're going to be leapfrogged by all these other people. And all these incumbents have a lot to worry about. So wake up. There's a lot going on. Go learn. There's lots of free courses all over the place. Play with ChatGPT and Gemini and all this kind of stuff and have some fun.
Awesome. That's great advice. Okay, Michael, I'm going to bring this one to a close. Hang back for a minute. I'll thank you everyone for tuning in, and until next time.